Good morning, everyone. How's everybody doing today? Hope everybody's having a good day. I got a chart up here on the screen. If you want to see it, it's kind of a beautiful day in Oregon. Awesome. Well, great. So, but it's kind of a. I always look at the natural gas contract for kind of a weather predictor. So, especially this time of year. Um, And you can kind of see this is a daily chart. And you can kind of see we've been kind of big uptrend here. And the reason for that is just because I think most people realize that the plains and the Ohio Valley and the Great Lakes areas and the Northeast just getting slammed by all kinds of winter weather and everything like that. But you'll notice it's been kind of pulling back here today, and the reason for that is if you just kind of look at the weather forecasts and everything like that going into next week, we've got even though it might be minus 30 degrees in North Dakota right now, apparently it's supposed to be like 55 degrees come Tuesday. So talk about a huge swing in temperatures, right? And that's probably why we're seeing the natural gas contract pull back, because all of a sudden the demand that was been having is going to get waned off. And so when I see that happening, I always go kind of check the weather and kind of see what's going on. Another kind of a worry about that a little bit though, with the as steep as the winter weather is, um, especially up in the plains and stuff like that. They've got a lot of no snow and all this good stuff. They get too warm up there. The cattle have their winter coats on, and um, and if it gets too warm too fast, they can't cool themselves down. We ran into this about 4 or 5 years ago, where it actually killed off about 25,000 head just because they couldn't cool down, and they couldn't even get into the ponds or anything like that and cool their bellies off or anything like that. So hopefully that won't happen again. So we'll just kind of see what goes on there. Um, and outside of that, we've got we've had some news come out this week. We had the Fed meeting minutes hit the wire yesterday, and basically they're saying that they're not too anxious to raise/cut rates at all. They are actually predicting to have another rate cut or two. I don't see how that can happen, but that's just me. I don't think they should have cut them, starting back in September. But they're, for some reason, they're on the edge of trying to still cut rates. And I know Trump wants to do that, but after we saw the CPI and the PPI numbers that came out and inflation's kind of popping back up again, um, if they just left them alone, they're probably better off than trying to cut them some more. It might just have inflation kind of spur back in even more. So I don't know how that's going to pan out. And they're right now they're still trying to figure out what Trump's going to do with the tariffs. He came out, what was it, night before last, and basically said that he's going to put a 25% tariffs on all autos and pharmaceuticals, which if you saw what happened with the European markets yesterday, and here I'll just bring this up. Um, this is actually the German DAX, and you can kind of see everything was cool, fine, and dandy until Europe opened up, and they just tanked off the German DAX here. And even today, they tried to bounce it up last night, but it's just now making another new lows. And what was interesting is that the European markets compared to the U.S. markets were actually outperforming our markets by over 4 times. They were up about 14, 15%. And we've been up, 3 or 4%. And all of a sudden, boom, uh, they just get hammered yesterday just because of, they do a lot of autos, right? They get Mercedes and Volkswagens and BMWs and everything like that from them. And of course, the AstraZeneca and everything like that's over there. So BASF. So the pharmaceutical side is going to be kind of slammed. And then, of course, Walmart comes out this morning and our sales are going to suck. So all of a sudden the market starts selling off, just because Walmart's a huge retailer, and if they say their sales are going to be bad, then of course maybe everybody else's is. So I think you're starting to see inflation starting to kind of take a bite. It's been doing that, but I think it's really starting to take a bite now with Walmart's sales being down. And of course, we saw the CPI and PPI numbers and all that stuff. Eggs are, still very expensive. Averaging, I think it's like $4.85 per dozen eggs right now. But I know in other places it's much higher than that, and of course, whatever it may be. But apparently, that's the average price, and usually it's around $1.89, $1.90 or something like that. So it's up quite a bit. So when we start kind of stepping back and looking at the markets, I don't know if this is the first little shake of maybe we're not going to have that great, and we're starting to get the retailer earnings starting to come out. And I think Walmart came out and said, hey, this is what it's going to be like. We're going to have a lot more retail earnings coming out over the next couple of weeks, and we're going to see how that goes as well. So, but anyway, one thing that I think is also interesting right now, and this is kind of a very, very early beginning. Right now, we're starting to get into the seasonality, and this is kind of a historical thing. It's not to say it's going to happen, so beware of that. We usually see the crude and gasoline prices start to move higher. We've already kind of seen, crude oil kind of bounce off that $70 area. Right now, it's up at 72.57. And one thing I thought was very interesting, we just kind of rolled over to the April contract, and these are futures contracts. In fact, I'll just get over to here so we can kind of just concentrate. If you look at the top left here, the very top one's crude oil. The one below that is gasoline. Then you got natural gas, and you have heating oil. That's those 4 contracts right there. And all heating oil is ultra low sulfur diesel. Okay. So, but when you start looking at, the contracts, when you roll from one contract to another, sometimes you're going to have a difference in price just because it's a futures. I mean, they're trying to predict where something's going to be in the future. And sometimes there's something called a premium, which if we're looking at, crude oil here at 73.25, and then we go to the next contract and it's up at $74, well, then it has a 75-cent premium. And on the other side of that, you can have a discount. If we're at 73 and a quarter and our next contract's at $73, then it's a 25-cent discount, right? So, and that kind of gives you some a kind of a look in the future if there's some enthusiasm or despair in that market. If you look at like the S&P futures, if you go out to the next contract, let me just show you that real quickly here. So right now we're on the March contract. So if I just put in the June contract here, you're going to find something out that we're at 61.10 right now. This one's at 61.68. So there's literally a $58 premium in going from one contract to the next in the S&P, which tells you something. What they're expecting the markets to be higher into the future, and that's optimism. And of course, in America, we're usually optimistic, right? So that's kind of a normal thing. When you see it at a discount, that's when it's kind of a little bit backwards. And we saw the S&P at a discount for about 8 or 9 years between the crash back in the financial crash back there in 08, 09 up until about 2016, 2017, 2018. We had a discount in the S&P. And then finally that switched around. And actually during pandemic, it flipped also, but it didn't last very long. But that's that premium and discount that you'll usually see. And so when I was looking at crude was actually at a 7-cent, not much. It's just pennies, right? Discount. But gasoline was actually at a 20-cent premium. So which tells me that they're expecting gasoline to be a lot higher going into the future, which is not unusual because this time of year, what happens is once we get into about March into April, we start converting over at the refineries between the winter gases and the summer gases. And so they have to kind of shut things down to convert those over. But not only that, they'll use that same time to actually, do some maintenance, clean out the scrubbers and all that good stuff. And so you actually have a delay between going from one to the other. So during that time period, you're going to have a decrease in gasoline production, and therefore you have a decrease in supply. And if you have the same demand, well, prices move up. There it is, supply demand, right? And you'll see that. And all of a sudden, once we get, past April, which you have to think about, March and April being, there's what, spring break, right? So there's going to be a lot of driving during that time period. Once you get past that, you get to May, school's out, and then it's time to go on vacation and everything like that for the summer. So you get a demand in that driving season also. So now we have a short supply, and then you have all this driving demand and demand on gasoline. And that usually has a tendency seasonally to kind of push crude and gasoline higher. There it is. And so the question is do they do that? Um, and I mean, but then you've got on the other side of that, you got an administration that wants to drill, baby, drill, which ought to slam. If we look at what happened in the last administration when he did that, crude oil was down at $35. So now we have kind of a tug of war between what's seasonally what it usually does and what could happen just because they increase the supply a whole lot more by producing more crude oil. So it's going to be interesting to kind of see if the seasonal trend, maintains itself, see if crude goes back up to 77, 78, maybe even $80, or does it just hang here with the tug of war of, yeah, we're still, seasonally strong, but I don't want to really produce more oil or anything like that because I like the price of oil where it is because oil companies make a lot of money here at $73. So there's going to be a tug of war in there. And it wouldn't surprise me if we don't just see crude oil just kind of churn and burn for a while, even though it might float higher seasonally. It's probably going to struggle doing that. So it's going to be really interesting to see what happens there. On the other side of that, when we start looking at the metals markets, the very, very top left one here on this one, you got gold, and you have copper, and you have silver. There's platinum and palladium. But gold's been trending up. In fact, it just made a new year high, all-time high. Earlier, was that this week, last week, whichever it was. Anyway, they've kind of corrected it back. And Friday, if you watched it, my goodness, they slammed gold down about $60. Only to on Tuesday just rally it right back up to where it was. And I couldn't figure out why they slammed gold down so bad. Really couldn't. I think they just did that just to kind of correct the market a little bit because it had a huge run. And all of a sudden, poof, we're right back up to where we were. And I mean, in fact, last night we went up to about 29.73, something like that. And so now we're here at 29.54, kind of hanging out. Silver's back above $33. I'd really like to see silver break above 35. That would be awesome. And copper is kind of the one to keep your eye on if you're looking at something more, see what the manufacturing is doing and seeing what China's doing. Copper's had a very, very nice rally. It opened up around $4, and now it's up here at 461. I'm going to talk about this year. And so it's had a very, very nice rally in it. And now the question is can it continue to do that? It has an all-time high of around 515. So we're not too far from there, but it's got a lot of work to do, especially if there's a lot of demand on copper. So, but I don't see where gold is going to be going down any. One thing is going to be really fun to watch, and I don't know what this is going to do to the market at all. That's why I think it's going to be fun to watch. Is apparently they're going to go inspect Fort Knox, which I guess they never do. Apparently, I don't know that, and see if we have any gold there. And I know that over the past, I'm going to say, 4 to 6 years, I know we have at Fort Knox a lot of reserve gold for foreign countries, and they've been pulling that out. So my question is does the U.S. own a whole bunch of gold, or is there like one bar left there? Exactly. That's what we don't know. Cyrus. I mean, good point. Is there any gold there? I don't know. They never inspect it, so how do we know? So that's going to be really interesting to see what it does to the market. Not only that, but that could really hurt the dollar if there's nothing there, right? Because there's nothing backing up the U.S. dollar anymore. And it might, make gold just go through the ceiling because, well, now they're going to have to buy up a bunch of gold, or it might, crunch gold pretty hard because, well, there is no gold or whatever it may be. I don't know. That's the humongoid question mark. And I think, like I said, it's going to be fun to watch just because we don't have any idea, and which is sad to say. You would think that we would always know how much gold and everything that we have, but we don't. So I'm going to be really interested to kind of see how that pans out. And so right now, I don't see anything that's going to, have gold moving down. I wouldn't be surprised if we don't get up to, $3,500, or higher, maybe even $4,000 this year. But that being said, I have no idea what this Fort Knox thing is going to do to it. It's just one of those things you sit there and go, I never thought about. Is there anything there, right? I mean, is it empty and we just have people maintaining a building? Or is there a ton of gold there? I mean, I have no idea. I mean, I don't think anybody does. That's the problem. So anyway, but I don't see where gold and silver are going to be turning around anytime soon. I think there's still going to be a big demand on it. Central banks are still buying it up, and everybody's trying to get some gold in their pockets. So there it is. But I think it's going to be kind of interesting to see how crude oil gets affected by the supply demand. It's normal seasonality versus what the administration is trying to do. And number two, what Fort Knox is going to do to gold and the dollar and all that good stuff. I mean, the dollar index has had a nice little rally here. We've gone up to, we're hanging above 106, 107 right now on the dollar index, and it's put some downside pressure on of course, the other currencies that it goes against, which is the euro and the yen and Canadian dollar and all that good stuff. So, but I think it's something to kind of watch and wait for, just to kind of see what happens with things. And I'm kind of interested to see how NVIDIA does next week. And I think everybody's kind of looking forward to that one. And if we can kind of see what their little, earnings and stuff like that are like, it'll be something to kind of really kind of look at and stuff like that. As far as next week is concerned, I think we've got like consumer confidence coming out on Tuesday, right around 10 Eastern. And of course, we got new home sales coming out on Wednesday morning. I think that's going to, look at what the interest rates are doing to that area. And of course, then we'll get GDP, and we'll start getting PCE also. So those are the kind of the big numbers at the end of the month, the GDP and the PCE numbers. And that's apparently PCE, which is basically, our consumption and expenditures as, just normal little U.S. citizens here, to kind of see what we're buying and selling and if we're saving anything and all that good stuff. So they'll look at those numbers at the end of next week. So there's kind of going to be the big thing at the end of the next week. But the home sales and everything like that, I think they're going to be watching that as well. But anyway, that's kind of what I'm looking at right now. And until we find out, and we'll kind of see what the weather does and see how that kind of affects, plantings and stuff like that as far as the grains are concerned. We're starting to get into the season where they're starting to put the inputs in to get ready for planting and everything like that, just depending on where you are in the United States. And then we get to kind of see, what's going in as far as corn, soybeans, wheat, and all that good stuff. So kind of a nice little exciting end of going into the end of winter here and going into spring. So anyway, that's kind of what's on my mind. And if you have any questions, let me know. Otherwise, we'll be back on Tuesday and kind of see where things are winding up to. Everybody talking about the bullish market in March, but I don't see any catalyst. Kind of an interesting thought there, Cyrus. if you're people talking about a bullish market in March, if you go back historically, let's just look at the equity markets themselves, the SP Dow, NASDAQ, and all that good stuff. If you kind of look at, how the markets have actually traded, um, when the market makes a low, it will usually make a low in March. Kind of interesting, but they usually will make a low in March. In fact, go back to that to 2009. There's a great picture for you. We were dumping off because of the '08, debacle, and '09. They're just hammering stuff because of all the financial markets. And they made the low in March, and then they took off from there. And it's not unusual to see in a bad market. In fact, look at pandemic. Go back to the 2020 pandemic. When did they make the low? March. So March is not unusual to see a low in a market. And then that's usually the first 2 weeks. It's kind of like October, if you want to look at it. Kind of like the first 2 weeks is usually kind of weak, and then they flip that thing around and they start taking off. So, and we're right here in February, and it depends, in my opinion, it all depends on what retail sales, and I mean the earnings, how their earnings come out on the retailers, whether that's going to be, kind of a bullish thing or a negative thing. But that's the one thing that I'm kind of looking at is how are I mean, if Walmart's saying no, sales are going to be bad, how many others? I mean, what's Kohl's and Lowe's and Home Depot and all those? I mean, who else is Home Depot's on the 25th? And there's Domino's Pizza, there's TJ Maxx or whatever you want to call those people. And there's Lowe's, TJ Maxx, Nvidia, CRM, um, eBay. Who else is over there? Hormel, Smuckers, some techie guys. There's Dell and Autodesk. So and of course, then the next week we'll get a whole bunch more of them. But I mean, we've got a lot of earnings coming out over the next couple of weeks. We'll see what March does. We'll just take it, a week at a time, month at a time, and we'll just kind of go from there. But yeah, but if you just kind of look at historically, if we're going to make a low, if they're going to correct the market, usually we make that low in March and they flip it right back around and have a nice little rally. Another thing, I went back and did a study. This was a long time ago. This is 10, 12 years ago, which doesn't, I mean, sounded like a long time, but really hadn't been that long. I actually went back and looked at, okay, if we make a low in March, do they ever make another new low? And if they did, and interestingly enough, they made it again in August. So it had a nice little rally up, made another new low in August, and they flip it back around and take off. Now, markets have changed a lot in the past 15 years. So it all depends on, a new administration. We've got inflation coming in here. And so I have no idea what it's going to do, but we'll just take it 1 week and 1 month at a time, and we'll see how it goes. So you bet, no problem. So, but anyway, but great. And another thing is, I mean, as you all are kind of, thinking about things just like you are now, which is awesome. And if you think of anything over the weekend or anything like that you want to kind of chat about, I mean, feel free to write it down. I mean, write it down on a piece of paper and bring it in. I'm here on Tuesdays and Thursdays. We can chat about all kinds of stuff. I mean, I've been in the markets for 30 years, so I've kind of seen a lot of things go on. But if you do want to ask other questions and stuff like that, feel free to do so. And if I don't know the answer, by golly, I'll tell you that, and I'll go dig it up and find out an answer to it. But I look at newses and all kinds of websites all the time. In fact, this morning I was watching a grain report from a guy and watching a weather report from another dude and checking out some websites and everything like that. So, but anyway, but if you do have questions, feel free to write them down and bring them in here. I don't have a problem with answering your questions. That's what this is for. I mean, this is for your knowledge. And if you need to want to learn something about something else, just let me know. And we'll cover it. I don't have a problem doing that. You bet. You bet. So, well, you all have a great and wonderful day, a great and wonderful weekend. Stay warm. I know it's still cold out there and stuff like that, but next week, apparently, we're going to have some warm weather. So, hopefully, it'll help thaw things out and help the Tennesseans up there. My goodness, those people, I feel sorry for them. Got flooded and then they got snowed on. Jeez. So, it has been a weird winter for a fact. But and we still got some along the way. So let's see what happens. But thanks for having me, and I will see you all next week.